so make sure you please stay towards the end. Short and sweet. I'm going to teach you guys how to add weekly options into your trading arsenal, okay? Weekly options. I just did a trade in weekly today, and I made 25% returns within minutes here. I show everybody all my trades all the time. I'm an active, very active, very profitable trader this year. As you can see here in Delta, I bought the weekly 38.5 calls. They expire tomorrow. I bought some for 30 cents. I already hit profit target number 1 at 40 cents. Last week on Friday, Green Mountain, I bought weekly calls. So weekly calls, we all know, have the highest gamma, but then also have high theta, and I'm going to teach you guys how to put this in your arsenal. This is from last Friday. These are real trades traded in my real dollar account, not a sim account, and I trade actively. Last week, I bought the June 120 calls that expire tomorrow. So there were the weekly options that expire tomorrow. I bought these last Friday for 27 cents. These absolutely exploded as there's rumors that going out that Green Mountain was going to get bought out. These options went to 30 cents, 36 cents, 50 cents, $1.30, $2, and then $3.10. If you look at my profit and loss, this is on a 50 lot, guys. I made $4,500 profit on this 50 lot in Green Mountain using weekly options and putting those into your arsenal. Today was my first losing trading day in June. That is going to happen, and as a trader, I have to know that every day is not going to be a profitable day. So as you can see here, here's my profitability at the top. I lost $10,917. As I said, I'm not a registered investment advisor. I do not give recommendations or advice. I trade 100% on my own money. I do not have any customer money. So this is today's P&L. This is my trading account. I'm always happy to show anybody that wants to my trading account. Open this trading account this year, right there, $220,000. I've spent about $80,000 in commissions this year. So I'm up about, I would say, $380,000 this year trading on a $220,000 account. Okay, I'm a very active trader. I trade a lot. When you guys learn and you're looking for someone that you want to teach you, do you want to be taught by someone who's not actively trading the market, or do you want to be taught by someone who's actively trading the market? I trade the market every single day. I trade anywhere between 1,500 and 3,000 options in a day. So profitability has been on fire. So let's go back to our mission here. My name is Andrew Keene. I'll be your presenter today. I've been reading pub for about 2 years. Me and Morgan go way back. We had a good time when we were in Vegas last time. I took my last $50,000 and I turned it into $5.5 million. Simple and easy. 2006, I blew out my trading account. I lost $490,000 in a company called AMAG, pharmaceutical. I went away to Thailand. I taught English in a Buddhist monastery for 5 weeks. On the top of the hills with the monks, I found the Ichimoku cloud. It was actually taught to me by a bunch of traders, and then I came back. I put the Ichimoku cloud into my arsenal. I had $50,000 left to my name. I said, this is what I'm going to do. I'm going to take this $50,000. I'm going to. This will be recorded, yes. I will take this $50,000. I will put it into my trading account. If I can make money, great. If I can, I'm going to go be a financial analyst. Maybe I'll go back and get my MBA. And I turned it into millions. I was a market maker on the Chicago Board Options Exchange for over a decade. From 2006 to 2009, I was the largest independent Apple trader in the world. Basically simple and easy. When they'd come in and ask us our quantity or our size, I was the biggest trader. This is great now that Apple's basically a $660 stock after the split. Apple was $80 before the split, before an iPhone, before an iPad, before an MacBook Air. I have taught thousands of students to full-time traders. Currently, right now, we have over 1,000 members, paid members, okay? So we have been growing very fast. I'm sure you guys have seen me present. If you have not seen me present, I'm sure you've seen me on TV. I am a regular contributor on CNBC, CBO TV, Bloomberg, Fox Business, Sky Australia, BNN Canada, WCIU, and more. I'll be on Fox Business tomorrow. Fox Business I do about twice a week, Bloomberg about once a week, CNBC maybe once a month, BNN every other week, WCIU once a week. So I always am there to share my information. When I was 25 years old, I basically always thought that those who can't do teach, okay? Well, now that I'm almost 35 years old, I always think that, hey, I was completely wrong. If I don't teach others how to properly trade, then they will never be profitable. As you guys trade, and throughout this presentation, I'm going to put up one number, and I want you guys to remember this number for the rest of your life. And the number is 90. And unfortunately, 90% of everybody that trades loses money. Why is that? The reason that 90% of all traders lose money, reason number one, they're setting improper risk to reward setups, okay? If you sell a dollar call spread for 10 cents, you're risking 90 to only make 10. Okay, I don't think it's a good proper risk versus reward setup. Number two, everybody's trading counter trend. People love to trade against the trend, okay? I have been long the stock market for 2.5 years, and I know personally I trade much better as a short trader. In 2007 and 2008, I was always short the stock market. Yeah, I lose money in a day. Yeah, I've actually made money in the last 2 days, but I know the market goes down, I'm going to be long, okay? In any healthy bull market, corrections are good. 7 times over the last 2 years, we've corrected anywhere between 5 and 7%, and every single time we found buyers. So is this, the reason to get short right up here? I don't think so. I think this is a buying opportunity. Maybe we were overbought, and now, we're pulling back a little bit. I'd much rather be a buyer today than a seller of some of my positions today. Little disclaimer here. A little disclaimer here. I am not a registered investment advisor. I do not have a 7 or 63. I have no customer money, okay? Everything I trade on is 100% my own money. So when I place a trade, I make or lose $100, $300, $3,000, $30,000. It is all my money. I cannot give recommendations or advice, which is bad but good, okay? Why is it bad? Because, I can't manage money because I would have to be registered. But it's good for you guys because I can offer my opinion in any stock you want. I'm looking at the timer here, and it seems like I might have an hour 15. And if I do have an hour 15, I thought I only had 45 minutes. We will go through lightning round at the end where I bring out the Ichimoku cloud. You can tell me any stock, and I can say bullish, bearish, or neutral within 10 seconds if I was to get long it, where I'd want to get long it. And it's really, really cool. A lot of traders really enjoy this as I go through lightning round at the end, and you guys can just fire stocks away and away and away. So let's talk about weekly options here. Options. 1 second here. Hey, can you call 15? So weekly options here. This is the best time in history to trade options. Simple and easy. On the trading floor, I was a market maker. Why was I a market maker? I had profit margin. I could buy an option for $1, sell it for $1.20. I watch a lot of option DVDs, okay? Lawrence McMillan is one of the greatest options educators in my generation. He's like Dr. J back in the day for basketball, okay? He's like, Jack Nicholson. I should maybe say Jack Nicholson. Jack Nicholson for golf, and I'm Tiger Woods. I like that better. So anyways, he used to always say, you give a presentation, he'd say, the market on the option is 5 bid at 570. If I buy it for 570, thank you, Jan, I have an hour 15. That sounds awesome. I will talk slower now. So, in McMillan used to say, the option is 5 bid at 570. If I were to buy the option for 570, the stock would actually have to move $3 for me to break even. Now, there are more exchanges than ever, which creates opportunity for a trader. Volatility creates opportunity. There are 8,700 publicly traded stocks. There are 4,200 stocks with options. Of these 4,200 stocks with options, there are over 320 stocks with weekly options. I love trading weekly options. I trade weekly options using the Ichimoku cloud on the 5-minute bar, and it works great. The reason I talk about the Ichimoku cloud, and I was going to give a presentation to you guys today and just talk about weekly options. That would be a great presentation, okay, because people love weekly options. But everybody also loves the Ichimoku cloud. So why would I give a presentation just on weekly options? Let's do a presentation on weekly options and the Ichimoku cloud. How can we combine both of those using my favorite technical indicator in the world and trading weekly options? I always say, as a trader, volatility creates opportunity. I have never once been in the elevator in Chicago, as I was on the trading floor for 10 years, and now I'm right across from the trading floor, and a trader say, I had the best day ever, the stock market didn't move, right? That doesn't happen. You know what they say? Oh man, today was crazy. The market was up 500, is down 500, is up 300, down to 300. Okay, Volatility creates opportunity. The best day I've ever had trading in my life, I made about $480,000, and it was the day that the market was down about 730 points, and then it rallied back to unchanged. The volatility index, or the VIX, was like up 8 points in the morning, and then it sold off. CBOE lists weekly options on indexes, stocks, and ETFs. CBOE published a list of assets with weekly options. I have 4 stocks that are my favorite stocks to trade using weekly options and the Ichimoku cloud. And I'm here today to teach you guys it. Apple, Facebook, Tesla, Twitter. I will repeat those again. Apple, Facebook, Tesla, Twitter. You can use weekly options and the Ichimoku cloud to also trade LinkedIn, Priceline, Netflix, Chipotle. However, my favorite and the ones I've consistently made the most money on are Apple, Facebook, Tesla, Twitter. This gives a trader 52 expirations instead of just 12 to potentially make money. Who doesn't want more chances to make money? Okay. My biggest complaint about trading equity options is that the market closes at 3 o'clock. If it was open at 5, I would love it because I would have more opportunity to make money. I know consistently I always make money trading. Have I lost money in a day? Absolutely. Have I lost money in a week? Absolutely. How about a month? I think I've had 1 losing month in the last 15 months. Okay. How about a year? I lost money in 2009. Okay. So out of my 13 years of trading, I had lost money, and that was in 2009. That was after the market went down at 666 in the S&P 500 futures, and we started rallying back, and I was always short the market. Should have looked at the Ichimoku cloud, and it would give me an indicator that the market was coming back, but I didn't. Weekly index options account for 11% of the index options volume in 2011, and this number has only grown. I have yet to trade an Apple weekly option. I've been so busy with my other positions, but Apple options trade great using the Ichimoku cloud, and I'm going to show you guys an example here in Facebook how I made money, about 250% return within hours. And you guys got to think of what kind of trader you are, okay? Think and close your eyes. And everybody trades differently, okay? I have a way in the trading room, okay? This is what I say to all my members. I can teach you how to trade, but I can't click your mouse, okay? So I can teach you how to properly set up risk versus reward setups, how I made money over time, but I can't be there to click your mouse, okay? So when I'm talking about trading as well, I can teach you guys proper setups, but if you don't use them, then you decide not to use them. Everybody in this world trades differently. If there's 10 people in a room, everybody's going to trade differently. Everybody has different risk tolerances, okay? I have been trading professionally for a very long time. It is my main source of income for my last 12 years, okay? This is how I've made all my money, is from trading. I know that I'm going to consistently make money over time, but I have a high risk tolerance. Somebody may be in the room right now and say, hey, I'm just trying to make $500 a day. For me, that would be unacceptable because that's too low of a risk tolerance. But you think about how much $500 a day is. That's about, there's 262 trading days. So if you can make $500 a day, that's $130,000. Using weekly options in the Ichimoku cloud is great from anyone beginner 101 to expert. From beginner 101 to expert. Ichimoku Kinkenhoi is the proper name, otherwise known as the cloud or the Ichimoku cloud. We're going to go over how it is set up, and you can memorize that if you want. If you don't want to, you don't have to memorize that as well. So everybody has a different risk tolerance. If you can make $250 in a day, that makes about $60,000. You say to yourself, $250 a day, that doesn't seem that tough, okay? Yeah, you can make $60,000, okay? So this can be done from anybody from beginner 101 to expert. I can teach you guys the skills to trade. Like I say, and I use the analogy all the time, would you rather be taught by Tiger Woods how to golf or by someone who's read 500 books on trading? I trade for my income. I professionally trade. I'm a professional trader, and I've been doing it, and I've been profitable for 12 years. Let's look at the volume in weekly options. CBOE has tracked the increase in weekly options since they launched. They launched in November 2010. These were statistics up until January 2014, and we see here The option volume has done nothing but increase not every single month. Everybody likes trading weekly options because you can get that huge percentage return in a short period of time. And I bring this up, guys, and I'm not going to show you guys examples of something in 2006 or 2009 or even earlier this year. This was a trade on Friday. As you can see, it's time-stamped here on June 6th. I watch institutional order flow by Green Mountain Coffee. The weekly 120 calls for 27 cents. Did someone know something? I don't really care because I'm trading on a publicly traded order. Then I started selling them. I sold them right off the bat. 36 cents, 50 cents, $1.30, $2, and $3.10. As you see the time elapse here, this is less than 2 hours. My last fill was at 1,000% profit. 1,000% profit. When was the last time you guys traded a weekly option and got 1,000% profit? Or any option and got 1,000% profit? I bought 50 for 27 cents. If we did the math of that, I was risking, what is that, about $1,300. My profit is on the right. That's after all commissions. I made $4,500. If I held these options actually went to $5, okay? So I could potentially have made $25,000 on this trade if I held them from 27 cents as they went up to $5. So Green Mountain Coffee, using those weekly options, okay? When you're trading, risk versus reward is a very, very important thing. People like rest and relaxation. I do not like rest and relaxation. I like risk and reward. Everything is a risk versus reward setup. The difference between a good trader and a great trader. A good trader thinks about how much money they can make if they're right. A great trader, I consider myself a great trader. I am always looking at, hey, if I am wrong, how much money can I lose? Why trade weekly options? Why should a trader like yourself, let's say you're a beginner, let's say you're intermediate, let's say you're expert, weekly options work for every single person here. Why trade weekly options? Sorry to say it, guys, stocks are boring. They are really, really boring. They move what, 1%, 3%, okay? Traders have to lay out a huge amount of capital for their stock, okay? We used to use Apple as an example. Now we can say Google. Let's say Google is $600. If I want to trade 100 shares of Google, that's $60,000 of capital I have to have on hand to trade Google. How much am I going to really make? Maybe the stock's going to move at $3. In Green Mountain Coffee, those options exploded, 1,500% profit, and the stock only moved about 6%. Okay, so stock moves 6%, the options move 1,500%. Stocks are boring, guys. You got to get in the new wave of trading. The new wave of trading is trading options, okay? I always say all the time that playing chess is very similar to trading stocks, futures, or Forex. As a small guy, you are always going to lose. It is very, very hard to consistently make money trading stocks, futures, or Forex because you're trading against algorithms, guys. I just started reading Michael Lewis's Flash Boys, and you're just trading against the algos. They're always going to win. If you trade that, good luck playing Bobby Fischer in chess. Or I saw Gary Kasparov in Chicago walk around and beat 20 guys move by move by move. If you play the computer in chess, they will always beat you because they're smarter than you. And that's how I compare trading stocks, futures, or Forex. However, in options, there's a bluffing mechanism, okay? A trader is not always buying calls to get long the stock. Maybe they're buying calls and shorting the stock. You never know a trader's stock position on against their options. And in the option market, there are currently no dark pools. The exchanges are fighting very, very hard to never, ever have dark pools. Trading options is like playing poker. There's a bluffing. The best traders, the best poker players are always going to win in the long run. However, there's never been a computer program that you could write to beat me playing poker, okay? Because there's a human mechanism of bluffing involved. Today, I saw some calls being bought in Finisar, FNSR. They had earnings after the bell. Stock was down $5 in after hours. And I say to myself, did that trader buy calls to get long as a speculation to the upside, or did that trader buy calls and short the stock and actually ended up making money? We don't know. We never know a trader's stock position against their option position, guys. A dark pool is somewhere that basically the way that it works is there's algos that trade and we're front running orders. We all know this. We read about it all the time. So if they saw someone going to buy 1 million shares of Facebook, they would buy that 1 million shares in front of them and sell it to them at a higher price point, taking advantage of the retail trader or the mutual funds as well. So these big firms, Citadel and Goldman Sachs, created something called a dark pool, okay, where a dark pool could trade blocks of stock with each other without telling anybody, okay? So a lot of times you're trading stock without letting you know. Well, I want to know that information. For options, I see every single trade throughout the course of the day. So that's what a dark pool is. So taking advantage of 1% to 3% moves, that's boring, guys. But using that option market, you can get 1,500% return. You can make, buy an option for 27 cents, as it happened to me last week in Green Mountain, and I can sell it for $5. Pinpoint a catalyst. Why should a trader want to trade weekly options? To pinpoint a catalyst. Whether a trader wants to trade Apple or Google for earnings, GLD or TLT for the Fed announcement. Weekly options represent the best opportunity to trade, not hold a position after the catalyst. Decline less in value from resulting implied volatilities. Drop post-news than standardized options. Because there isn't much time left in these options explode as the stock moves very, very little. So if you want percentage return, okay, if you want to take that small amount and make it a big percentage return, weekly options are for you. And the way I trade weekly options, I trade them much smaller, okay? So I saw some calls in Delta today. I bought some Delta calls. I started selling them out for 25% profit, but I only bought 40 of them. For me, that's not that many. I bought some Twitter calls that were, I bought 300 of those. So, 40 lots pretty small. Credit spreads we're going to go over as well. So don't worry about that. And when I go back to talk about, what kind of trader you are, I can't make you what kind of trader you are. So like saying, hey, I'm a good basketball player. I play really well, but I shoot, with my elbow out. Well, if you're still shooting well and your elbow's out, I could tell you 100 times over to put your elbow in. However, that's not going to do anything. Okay, that's not going to do anything. So think to yourself, what kind of trader am I? Am I a debit spread trader? Am I a credit spread trader? Am I a breakout trader? Am I looking for that home run? I know that a way I personally trade singles, doubles, triples, and maybe I'll get a home run 3 times a year. I've made over $25,000 in the last year in 3 takeover stocks, PL, AER, and SYY. So I'll hit a homer every once in a while, but there's a reason that Mark McGwire is not in the Hall of Fame and Tony Gwynn is, okay? Just trying to hit singles, doubles, triples, then hit a single, steal second base. Not going for the long ball. I'm not sitting here, and that's why you can see in Green Mountain, I started taking profit targets at 36 cents. These things went to 5, but I had profit targets at 36 cents. So the first cents into 27, that was a 33% return in 16 minutes. A 33% return in 16 minutes. I mean, 33% return sounds great. So we're going to be talking about credit spreads, okay, where you can potentially make 25 to 30% every single week, guys, okay? It's so important to realize that using these weekly options, you can do this every single week over and over. In our workshop, we're going to be talking about trading credit spreads. If you're a credit spread trader, okay, you can do iron condors based on measure move targets and potentially profit 25 to 30% every single week. Maybe you're not that kind of trader. Maybe you want to do call or put butterflies, where you can potentially make 400 to 500% using measured move targets. I was talking to my trading room yesterday about doing a put butterfly in Lululemon for earnings. Put butterfly based on measure move targets and call butterflies based on measure move targets are my favorite trades out there. Or maybe I'm a day trader. I will teach you guys how to properly day trade Apple, Facebook, Tesla, Twitter, using the 5-minute bar and weekly options. Do not trade options when the stock The best stocks to trade options are with Catalyst, okay? I repeat all the time, and I talk about the 4 stocks that I consistently make money on, okay? If you want to try trade LinkedIn, CMG, Priceline, Netflix, you're on your own. I'm sorry. I've never consistently been able to make money on those using the Ichimoku Cloud and the weeklies. I'm honest. I would never teach anything that I didn't believe in myself. I take capital every single day to work on this because I believe in it, okay? And I'm here to teach you the proper ways. I can't be at home clicking your mouse. I can teach you how I've consistently been profitable over the years. I would never teach, to be honest, I'd probably never teach a workshop on a covered call strategy because I don't believe in it and I don't trade on it, okay? I trade on certain things, and this is one of my trading plans. I don't have many of them, and this is one of my trading plans. So I want to look at catalyst-driven events, weekly options for a stock that has earnings. I love trading weekly options for earnings. I did not put on a trade yesterday in Lululemon because it didn't line up from my point of view. If I had to choose anything, I would have got short. James, who's our other trader, had a great trade in Alta. James Romelli, who I personally back with my own money, he opened his trading account with $27,000 in September, and he's doubled his money before commissions. He's doubled his money before commissions. And I personally taught him how to trade. And he had a great trade in Alta using the measure and move target. The thing about Alta is it is a June position because there's no weekly options. There's only about 320 stocks that have weekly options. Well, the question is, how does the exchange decide who gives the weekly options? Well, weekly options are for the ones that trade the most volume, okay? Apple, Facebook, the ones that everybody wants to trade are going to have weekly options. Company like DAN, which is Dana Corporation, just remember seeing that on the tape today, that's not going to have weekly options because it doesn't really trade that actively or aggressively. So I like to trade weekly options for earnings as well. Economic data releases, SPY, GLD, TLT, for event-driven events, such as economic data or the Fed meeting. I do not like to trade weekly options where the straddle price is very, very cheap. Okay, so just keep in mind, okay, what am I going to make more money on? Trading one of these big boy stocks that have high growth, high PE, and move a lot, such as Apple, Facebook, Tesla, Twitter, or am I going to make money in GE? Probably not going to make money trading GE options, right? If the straddle is less than 75 cents, I call these commission killers, and it's hard to beat the juice. Do I buy calls and puts in Apple only? Well, I'm going to teach you guys in our workshop, and it's going to be a live workshop, how you can use the Ichimoku Cloud to take trades, risk versus reward setups, buy puts or calls. I'm going to teach you guys credit spreads. I'm going to teach you guys butterflies using the iron, the measure move target, and I'm also going to teach you guys iron butterflies. So the workshop we're going to be talking about is anything from Green Mountain. I bought an unusual option activity. So we're going to be talking about anything from beginner 101 to expert in the workshop. So this is the Ichimoku Cloud. We're going to talk about how the Ichimoku Cloud is constructed. So now we spent some time and we've looked at weekly options. What are weekly options? How do they trade? How many stocks have weekly options? Who should trade weekly options? Who should trade weekly options, guys? Anybody that's beginner 101 to simple and easy. So here's a chart of Facebook on the 5-minute bar. When I am trading weekly options as a day trade, I want to use the 5-minute bar. The stocks, I will repeat, Apple, Facebook, Tesla, Twitter. So here's Facebook on the 5-minute bar. I know personally I trade best as a breakout trader. I know this day in Facebook that Facebook had support at $60. So after it broke the cloud to the upside, I wanted to get long. I have certain choices of what I want to get long. Do I want to buy calls? Do I want to sell puts? Do I want to buy call spreads? Do I want to buy stock outright? Well, in this situation, I bought the Facebook 62 calls. Why did I buy the Facebook 62 calls? Is I run a spreadsheet, and I'm going to teach you guys in the workshop how you can run this spreadsheet. Very simple and very easy. Anything in this world is the difference of what one person's willing to pay for it and one person's willing to sell it for. It's called the supply-demand curve. More aggressive buyers pushes up a price. More aggressive sellers push down the price. At the end, when we talk on lightning round, I'm going to pull up stocks, and you don't need to know what this company actually does. That's the greatest thing about trading. Let me tell you a little story from the trading floor. I was in the pit, and I was a young, buff little clerk, and I wanted to learn everything. The market maker came, the broker came in the pit. He goes, "Hey, how are the ZZZ 30 calls? My trader made a market." And I said to him, "What does that company do?" He looked at me. He says, "Does it really matter?" And I'm like, "You make a great point. It doesn't matter. None of these companies are worth anything. You have analysts upgrading and downgrading it. You have PEs. You have revenues. What does any of that mean? You have growth rates. The difference of what anything in this world is worth is what someone's willing to pay for it and someone's willing to sell it for. Simple and easy. More aggressive buyers, price goes higher. More aggressive sellers, price goes lower. I have a condo in downtown Chicago. Let's say I thought my condo was worth $500,000. So I put it on the market to sell it for $500,000. Let's say the highest bid is $400,000. Is my condo worth $500,000? The answer is no. Okay. I would love to sell Facebook at right now at $100. Well, it's not worth $100. Okay. So every single day in the marketplace, there is a battle. It is called a tug of war. There is a tug of war between bulls and bears. The bulls pull on the rope. The bears pull on the rope. Whoever pulls harder wins. Just like the stock market. Just like supply-demand curves. More buyers, higher the price goes. More sellers, lower the price goes. So here's Facebook on the 5-minute bar. I'm going to easily teach you guys the Ichimoku cloud. Couple things about the cloud. Why it's so great. Number one, it is a 100% free. I'm not here to sell you the Ichimoku cloud. Trust me, if I created the Ichimoku cloud, I would sell it to you and you guys would all buy it because it is awesome. Okay? So you can get it for free on the following platforms: Thinkorswim, TradeStation, TradingView.com, and also on NinjaTrader. You would have to Google how to get it, but I've heard you can get a plugin on NinjaTrader. I've talked to my good friends at TradeMonster. They've read my book, and now they're basically going to create an Ichimoku cloud for TradeMonster. So number one, why the Ichimoku cloud is so great. It is 100% free. Number two, it is great because it's the only technical indicator that looks at the past, the present, and the future. Think of any relationship that you personally have. You want to know how it looks now, how it looked in the past, and how it could potentially look in the future. If you have a relationship with a sibling, maybe a significant other, boyfriend, girlfriend, maybe you like, I don't know, whatever you're into. So past, present, and future. A friend of yours, okay, you say, how does the past look? How does the present look? And how does the future look, okay? In theory, you want those all to be strong or bullish, right? Or you want it to be up. My relationship with my mom has always been great. Right now it is great, and in the future I think it's going to be great too. Simple and easy. You could say, hey, in the past it wasn't that good. Right now it's getting better, and in the future I expect good things from the future. So I'm going to teach you guys how the Ichimoku cloud is constructed. If you guys want to remember and memorize all the equations, and if you know Japanese, I'm probably butchering all the words because all the translation is taken from Japanese into English. So if you want to remember it, feel free to remember it. If you don't want to remember it, all you have to do is pull it up on a chart and within seconds. The word Ichimoku actually means at first glance. So at first glance is a chart bullish, bearish, or neutral. And I'm going to give you guys plenty of opportunity and time at the end to just fire stocks at me. As many stocks as you guys want in my time period. And I will tell you, bullish, bearish, and neutral, where is a good entry and where is a good exit. So this is Facebook on the 5-minute bar from May 12th. First indicator we have, the Tenkan sign is the short-term trend. I set up my colors accordingly, but if you don't want to set up your colors, you don't have to set these up. I like to set up the Tenkan sign with a red line. So the Tenkan sign is known as the short-term trend. This is similar to a 9-period moving average. How this is calculated is the highest high plus the lowest low over the last 9 periods divided by 2. So it's got a Fibonacci retracement in there. I will tell you, simple and easy, why moving averages do not work at all. Simple and easy. Let's take an example. We have Apple. Let's say Apple's trading $95. If Apple is $95, it sells off every single day for the next 2 weeks from 95 to 75, and it closes exactly at $95. A moving average is just going to give me the closing price of $95. Ichimoku Cloud, otherwise known as Ichimoku Kinken will show me that it sells off. And I'd rather be short it than long it because most likely it's going to sell out during the day. So this is the red line. This is the highest high plus the lowest low over the last 9 periods divided by 2. Okay, so this is how the present short-term trend is. Cajun sign is known the highest high plus the lowest low over the last 26 periods divided by 2. Okay, highest high plus lowest low over the last 26 periods divided by 2. This is the Tenkan sign. This is a longer-term trend in the present market. So we have the short-term trend and we have a longer-term trend. If you say to yourself, what are these weird numbers, 9 and 26? Ichimoku Kinken ICHIMOKU space Kinko KINKO space HYO. Okay, Ichimoku Kinken is constructed on the Japanese trading calendar. Japanese trading calendar used to be 6 trading days in a week and 26 trading days in a month. It has been back tested to move to today's society of 5 trading days in a week, 22 trading days in a month. However, it does not work. So just stick to the default setting of what it gives you. So this shows me the long-term trend at the present time. Then we have the Sankbon A. You say, how is the cloud constructed? Maybe some of you guys out there want to know how the cloud constructed. Maybe some of you say, I don't really care how the cloud's constructed. Just show me how to make money, Andrew. Simple and easy. Sankbon B or Sankbon A is the future short-term trend. This is constructed by the Tenkan sign plus the Cajun sign divided by 2, plotted 26 periods in the future. Tenkan sign plus Cajun sign divided by 2, plotted 26 periods in the future. So today's cloud was actually constructed by 26 periods ago. Sankbon B. Sankbon is the highest high plus the lowest low over the last 52 periods divided by 2. So if the stock is not making a new 52-week high or 52-week low, then this line is going to be pretty flat. As we see here in Apple or Facebook, it wasn't making new highs, so it was pretty much flat. This is the highest high plus the lowest low over the last 52 periods divided by 2, plotted in the future. So we now know the present trend. Simple and easy. I can bring up any chart. If it's above the cloud, it is bullish. If it's in the cloud, it is neutral. If it's under the cloud, it is bearish. And we also want to look at the past, and we're going to talk about the past here in a second. Now we know how the cloud is constructed for the future. Chemo is known as the cloud. Hard or easy it is to break trend. As I say, and I continue to reiterate the fact, every single person trades differently. Some people, I know I'm a breakout trader, okay? Some people like to take thinner clouds. Thinner clouds are going to have more entries, more traps. A thicker cloud is going to have less entries, less traps, but wider stops. I personally like a medium-sized cloud, which is going to give me a decent amount of signals, and it's going to give me not that many traps, and it shows me the trend is pretty strong. So Chemo is known as the cloud. In Japanese, it actually translates straight back to cloud. How hard or easy it is to break the trend. Keikuspon, today's price, just plotted 26 periods ago. So it's like looking at your relationship compared to how it was 26 periods ago, which, if you're using a daily chart, is 1 month ago. So how is my relationship versus 1 month ago? Is it better? Is it worse? Do I think there's going to be, is it better or worse? So this is today's price, or the current price, plotted 26 periods ago. And you say to yourself, Andrew, why couldn't I just count 26 periods back? Well, you could, right? However, it's just easier to throw this line out here. So this is today's price, or the price currently, depending on which bar you're using, plotted 26 periods ago. So we see here in Facebook, broke the cloud to the upside. The present bar broke the cloud to the upside. Okay, it broke the cloud to the upside, bullish. It's trading above the 9 and 26 period moving average, bullish. The future is headed out and up. That is strong. And it is trading higher than it was trading 26 periods ago. So all these is very, very bullish. So I decided to take a trade. So this is the second day here in Facebook as Facebook breaks the cloud to the upside. What did I do? Well, as it broke the cloud to the upside things here, I had an ATR, which is average true range. And I'll show you guys in the workshop how you can calculate an average true range. What is important is, are institutions buying or selling a stock throughout the course of the day? When the opening bell rings, for the most part, mutual funds, pension funds, sovereign wealth funds, hedge funds, they have a strategy. They're either buying Facebook for the day or they're selling it for the day. They either need to unwind and load off 1 million shares of stock or they need to buy 1 million shares of stock. So usually these work best because it is a trending. Okay? It's trending. So broke the cloud to the upside. I know from calculations that I'm going to teach you guys in the workshop that Facebook's average daily range is around $2.10. And I'm going to teach you guys how you can look at institute. You can just take out an Excel spreadsheet, so easy and simple, and figure out what are the institutions doing when the stock opens. From open to close, does a stock historically sell off or rally? Does a stock historically sell off or rally? It's so important to know institutional order flow. Last year in Apple, 70% of all the days, Apple sold off from open to close. This year, Twitter sells off from open to close. In the last couple days, it's been bought every single thing. ATR is average true range. How much the stock actually moves from high to low during a trading day. So this is where I knew that Facebook was going to stop out. Okay, I knew Facebook was going to stop out around that period. Does it work every single time? Absolutely not. But broke to the upside. If the low of the day was in at 60.20, then I think Facebook can get roughly to 62.20, which is how much it moves on average during the course of a trading day. The S&P 500 have an ATR of around 10 to 12 points. Every stock has different ATR. Some stocks have an ATR, that's higher, depending on the implied volatility. Some stocks have ATR that is lower. So simple and easy. And I send this signal out. This is trading weekly options using the Ichimoku. My trade, entry to open and filled. I bought 40 Facebook weekly 62.5 calls for 41 cents. As we see here, and we go back. Why did I buy the 62 calls? I want to buy where the ATR is. I want to buy where the average true range is. So I think Facebook can get to 62, and then I think it will sell off. I wouldn't want to buy the 63 calls or the 64 calls. When you guys buy out of the money options, you want the out options that will go to that strike, okay, because that's when the ones are going to get the best percentage return. In the money options, I could have used that. At the money options, I could have used that. However, out of the money options will give me the best percentage return if I'm right on my trade. And like I said, I didn't want to buy the 64 calls because I didn't think the stock was going to go to 64. What I want to buy is where I think the stock can move. So I thought the stock could move to 62, so I bought the 62 calls. So entry to open and fold. I bought 40 of the Facebook weekly 62 calls for 41 cents. Profit targets. Trader, I always have profit targets. My profit targets are going to be 55, 70, 85, and a buck. Simple and easy. First profit target would pay me about 40% return on my money. Second profit target pays me about 75% return on my money. Next profit target, doubling my money on that trade. And final profit target is 250% profit. The 62 calls, when I'm buying options, I'm going to get the best percentage return. I'm going to get the best percentage return on the options that's out of the money. So I think it will get to 62, and then sell off. Okay, I think it will get to 62, then sell off. So that's why I bought the 62 options. So simple and easy. Took profit target at 40% profit, then 75% profit, more than a double, and then 250% profit. How do I select a target on my trade? And this is statistics I ran for Facebook. In the workshop, I'm going to teach all you guys how to do this so you'll know how to do this. Trading days, there has been 83 trading days up until May 2nd. How many days is Facebook up from open to close? It is so important to know if a stock is getting bought or sold throughout the course of the day. So from open to close, are there more buyers or sellers? So how many days, what percentage of the days are up days? What percentage of the days are down days? In Facebook, it's about 50-50. Average range, $2.20. Okay, so you calculated this, and I'm going to teach you guys in the workshop how within 10 minutes you can get all of this information. It is so important to know institutional order flow. As most traders buying or selling a stock from open to close, and average range. We just take the highest high of the day minus the lowest low and divide it by how many trading days there are. Okay, so what's the average range? And the average range was $2.20. So this is where I thought Facebook would potentially go, and then it would sell off. If we went back to the chart here and we looked at it, where did Facebook sell off? At exactly $2 and maybe 8 cents. $2.08. Okay, so this is very, very important here. Trading weekly options with the Ichimoku cloud. Summary: weekly options offer a trader more expiration than standardized options. Generally, these options are at a lower price point than standardized options. These options expire on Friday and are listed on the Thursday. Weekly options can experience fast, violent moves in delta because the gamma is always highest at the money and closest to expiration. Can use these stocks as vehicles for day trading during the day. Apple, Facebook, Tesla, Twitter. There might be a lot of you in there that say, hey, I love day trading. It's awesome. I want to be in a position. I want to be out of position. I want to go home with no position on. Someone else might be out there and say, I don't like day trading. It's just not for me. It's too fast. So let's talk about the workshop we are offering, okay? And then we're going to go into charts and questions after. The special topic course on June 25th, 4:30 to 6:30 Eastern Time, 3:30 to 5:30 Central Standard Time. Trading weekly options using the Ichimoku cloud. You guys can sign up on the link that I just put in here. It's optionsonthefloor.com/speed. Or you can give us a call at 859-963-3445. I gave you an introduction of what weekly options can offer you. I've talked about how you can use weekly options combined with the Ichimoku cloud. I'm going to teach you 4 trading plans. Just like why teach you weeklies if I can teach you weekly and options together. Why teach you one topic if I can teach you 4 different strategies? I'm going to teach you guys iron condors, where a trader can potentially get 30 to 40% returns if a stock stays in a wide trading range. Iron butterflies, where you can make money if a stock doesn't move at all or moves in a little bit. 200 to 400% returns potentially. And there's 7 ways a stock can move. And I'm going to teach you guys how to implement strategies based on the 7 ways the stock can move. Butterflies, and then we're going to talk about this, and I use these every single week. How I can use butterflies using the measured move target to get potentially 500% return in days. Or my favorite one, which is call options or put options using the 5-minute bar in Apple, Facebook, Tesla, Twitter. And we are offering this course today for $97. This will be available on my website for $197. We're giving you guys a 50%. We're giving you a 50% price break. It's June 25th. It's on the top, 4:30 to 6:30 Eastern Time. 3 things I want to tell you about the workshop. and then we're going to give away a couple more DVDs. We'll go through lightning round on the Ichimoku Cloud, and then I'll give you guys back to Trading Pub for your next great presenter. Number one, we will 100% sell out at this price point. We will sell out at this price point, and then we double the price. If you want to buy it on my website, it's going to be double the price. So number one, we will sell out of this price point. I sell out of every single workshop I do. Number two, if you cannot make the time, don't worry about it. Only about 40% of the people show up. What you can do is you can just sign up, and you're going to get the recordings for free. We have all the recordings for every workshop up between 24 and 48 hours. So we'll give you guys the recordings for free if you cannot attend. So this will be a live workshop. If you cannot attend, no worries, because we'll give you the recording. And number three, which I'm sure everybody knows, and my good friend Hubert Centers taught me, absolutely 100% money back guarantee. Okay? Absolutely 100% money back guarantee. If you guys take the course and you're not happy with it, if you did not learn $97 worth of information, then I will give you your money back. I do not want your money if you're not learning $97 worth of information. I mean, I think this course, all my courses are probably worth about $500. But if you guys take this course and you don't like it, I'll give you your money back. So there's no reason for you guys not to take advantage of this promotion right now. Sign up, because we will sell out this price point, and you're guaranteed to get your money back if you don't like the course. I'm going to give away a DVD right now, and the first person to get closest to this answer, I'm going to give a free Ichimoku course DVD. So I'm going to ask you a question. Whoever gets closest answer, we're going to give away 3 DVDs today for free. The first question, first one closest to this answer. As we talk about Green Mountain Coffee, as I made $5,000 last week, how many full-time employees does Green Mountain Coffee have? How many full-time employees does Green Mountain Coffee have? First one to get close to the right answer. 3,600 too low, 50 too low, 30 too low, 3,000 too low. Still no one even close, guys. I need closer. 5,000 is too low. 1 million is too high. 12,000 is too high. 20,000 is too high. You guys are 6,300. 6,300 is the right answer, or closest answer. Hung Low, Polo. Hey, Polo. Polo, you want a free Ichimoku course DVD. So if you just send us your address to thank you at the KeeneOnTheMarket, we'll make sure we send you that. We sell that on our website for $197. Free Ichimoku Cloud Workshop DVD. We're going to give away one more DVD here. Let me just think of a question. Ooh, I'm going to think of a good one. This is my new favorite thing. I want mangoes. So Polo, you won. Ooh, let me try a different one. Let's try this one. I'm just thinking of a question here, guys. How much can Radio Shack go down if it goes down 12 cents a day? No, that's not a question. Okay, the next question, whoever gets this answer right, first and gets this answer right, will get a free Ichimoku Cloud DVD. Which country exports the most amount of mangoes? Which country exports the most amount of mangoes? India's wrong. China's wrong. Mexico is right. K. Brewer is right with Mexico. The first one to get the right answer. K. Brewer, you are right. Just send us your address to thankyou@KeeneOnTheMarket.com. K. Brewer, so I have to write down Polo. K. Brewer will send you a free Ichimoku Workshop DVD in the mail for free. It's $197 on our website. And we're going to talk about lightning round here. So make sure you guys take advantage of this course. We will sell out. There's no reason for you guys not to get in today because of the money back guarantee. So simple and easy. Any stock, futures, or Forex you guys want, all you got to do is put it in right here. And I'll tell you bullish, bearish, neutral, where to possibly get in. WWE is nothing but a short, unfortunately. So WWE, simple and easy. Using the daily chart, it works best. It is technically a short setup here. There's nothing to do here in WWE. My Ichimoku Cloud's not coming up. Oh, no, that's not good. Come on, Ichimoku, try a different one. Let me try to restart this here. There we go. All right, WWE. There's trade here in WWE. Possibly get long. This was one of the greatest looking charts for a very, very long time. Consolidating bars here might go higher. If you want to aggressively get long it with a stop under 1050, there's two ways to trade WWE. It's short or flat. eBay. Ugh. eBay is the definition of a trade as a trading range stock versus a trending stock. You know, eBay could have possibly bottomed here. I'd rather get short than long eBay. If you sold the 9-period moving average, you could short eBay at 49.48 with a stop above 50.65. I think eBay heads lower. ConocoPhillips, great. Love ConocoPhillips. It's headed higher. I was on July 85. I sold those way too early in ConocoPhillips. This is an oil name. All the oil names are going higher. Oil is ripping higher. Conoco looks great. Oh, Philip Morris International. This is one of my bigger positions today. Anytime it's hit the 26-period moving average, it's found buyers. Technically get long Philip Morris at 41.23. Stop at 38.50. There's two ways to trade MO. It is long or flat. UAO. I haven't heard that one. It's not a stock. That's why. Whole Foods. Whole Foods is looking like it's starting to build something here, some momentum here. I think that Whole Foods can get to 47.47. Technical short setup. You can short it here. Stop in the cloud at 45.15. You can short the bottom of the cloud with your stop above the cloud. Whole Food I think goes lower. This is your lightning round. Amazon. Two ways. It is short or tried to break the cloud to the upside yesterday. Shooting star into the cloud here on the daily. There's basically flat. Amazon, there's nothing to do right here, right now in Amazon. Mango Futures, I don't know the ticker for that one. SSYS, this is a short opportunity. You can short SSYS at 92.73. About a $10 stop here. There's two ways to trade SSYS. It is short or flat. ATK. ATK, Atlantic Technologies. And we see it here. It is under the cloud here. You can short ATK here. At 137.63. Stop in the cloud at 145. Not exactly the best chart short. I'd rather get short than long. Diamond Offshore, DO. Diamond Offshore, we see here. Ichimoku coming up. Here we go. Diamond Offshore testing the cloud here. Broke the cloud to the downside. That was a short signal here. You can get re-short Diamond Offshore if you want at 48.78. Stop above 51.84. I think Diamond Offshore goes lower. MU Micron runaway train. This is one of the best looking charts out there. Technical buy setup here, here, and here. Micron looks like it's headed higher. Today it's making an inside day. You can buy 9-period moving average, put your stop under the 26, or you can buy the 26 with your stop in the Ichimoku cloud here. NDAQ, NASDAQ is into the cloud here. If it's into the cloud, that is neutral territory. We're going to give away one more DD here. If you guys want any stocks, I can do currency pairs too. Tesla here is under the cloud here. Tesla is another short signal here. If you want to get short Tesla, you'd have to put your stop above the cloud. Technically, Tesla is a short candidate. UAL, huge pullback today on all the airline stocks. Micron, we went over. Micron's a buy. UAL out here. I wouldn't want to take anything in UAL. This is a trading range stock. Ichimoku Cloud works best on a trending stock. SPY looks really good. It is a recent pullback here. That's okay. Pullbacks should get bought here in SPY. You could technically buy SPY here at 193.5. Put your stop under to 190. SPY head higher. Yahoo! That's like, wee! Yahoo technical buy setup the other day at 36.26. I think Yahoo heads way higher into the Alibaba news. ICPT. ICPT into the each here. No trade here. Neutral territory here. If it breaks the cloud to the downside, you can technically get shorter. We talked about Amazon. IBM. And I could sit here and just, go through stocks all day long, or what I can do is I can teach you guys, okay? I'm in the camp of why give you fish when I can teach you to fish, I can tell you what club to use, how to hit it, or you can learn on your own. IBM, I think, heads lower here. You can short IBM at 184.18, stop above 187 if you want to wait for the mild pullback trader. 744. IBM heads lower. Nuance Communications. NUAN. Nuance Communications here. Possible double top here against $17. Technically a buy signal here. I would wait for a pullback to the 9-period moving average. I want to get long Nuance on a pullback. NTAP, NTAP. NTAP is breaking the cloud to the downside. If it breaks the cloud to the downside, I think it goes lower. So let's talk about the workshop one more time. Then I will let you guys get on to your day, and the lightning round is officially over. Oh, actually, let's look at a couple currency pairs. Sorry. I like to look at currency pairs. Plus, I go to Forex, and I'm going to move them to a 4-hour bar. So I'm going to go to Euro USD. Let's go to USD Euro. Can't find it. Euro. There we go. Euro. And you go to a 4-hour when you're trading the Ichimoku Cloud. 4-hour bar when you're using the Ichimoku Cloud. Thank you very much, Steve. That's very nice of you. Okay, Euro. Yeah, this is Euro Dollar. Euro Dollar technical short signal here. You can short Euro Dollar at 135.46.4 with a stop about 60 pips higher. I think Euro USD goes lower. There is no special or minimum requirements. This is the last time we're probably going to ever do this course live. This will probably be the last time we ever do this course live. So you guys should take advantage of getting this live. Euro, pound. Euro pound, that's headed lower. Technical short setup anywhere in here. Euro pound, you know, you can short it here if you want at 0.80 basically. You put your stop about 50 pips. You could wait for a, you know, pullback higher to, you know, 8.803. Euro pound is headed lower. Dollar chef. US dollar against the chef. I call it the chef. It's a Swiss franc. Swiss franc here, overlapping bars here. This is not a good one to trade on the cloud here. Anything with a Swiss franc is probably not going to trade very well in the cloud. You want a cloud that's going to trade trending versus trading range. And one more time, let's get one more currency pair. Someone wants to see Aussie dollar. Or am I just making up things? All right, let's talk about the workshop one more time, and then I am going to the workshop, and then we are gonna I'm gonna let you guys go. I'm gonna give you one more DVD away for free. There's no prerequisite, absolutely not. You can go in there knowing nothing about anything. My interns take this course, and they've figured it out. Special topic workshop. It is June 25th, 4:30 to 6:30 Eastern Standard Time. You will learn how to trade iron condors, potentially profit 30 to 40% returns in stock stays in a wide trading range. Iron butterflies, where you can potentially profit 200 to 400% returns. I've taken every single one of these trades and been profitable within the last couple of weeks on all 4 of these setups, guys. They work awesome. I'm never going to teach you something that I don't take my own money and risk. Butterflies, using the measure move target, potentially get 500% return in days, and calls and puts, trading Apple, Facebook, Tesla, Twitter. Optionsonthefloor.com/speed or 859-963-3445. $97. 3 important things. Number 1, it will be sold out. So lock in your price today. Do not wait till it gets sold out. This is just like when Google Glasses came out. They sold them for 1 day, and I was so mad the next day because I really wanted Google Glasses. You know what? I couldn't get them anymore. Price went higher. So don't get left out of this. Take advantage of this $97 price point. It's an incredible price point. Number 2, we'll give you the recording for free. It'll be up 24 to 48 hours. So if you cannot attend the workshop, no worries. You don't have to attend it. It will be live, but you can get the recording for free. And number 3, 100% money back guarantee. I'm sure you guys all know my good friend Hubert Centers. He taught me this, and it works out great. So I want as many people to come to the workshop. And if you don't get $97 of value, I'll give you your money back. Simple and easy. Thank you, everybody, very much. Thanks, Yana and Morgan Augusta. Oh, there's Morgan. He showed up. My good friend Morgan Bugsby. And Trading Pod for letting me present. I always have a great time. You guys bring a lot of energy, a lot of excitement. I really, really appreciate it. Thanks, guys. Oh, one more DVD. Okay, one more DVD I'm going to give away. Thank you for reminding me. So let me find another one. Which country? Ooh, this is a good one. Because I think I know the answer for this. I'll probably be wrong. What country exports the most oranges? What country exports the most oranges? Yugoslavia is wrong. USA is wrong. Egypt is wrong. Panama is wrong. USA is wrong. Brazil is wrong. India is wrong. Spain! Paul, you are correct. So Paul, Spain. Oh, thank you, Yana. Paul, just send us your address to thankyou@KeeneOnTheMarket.com. We'll send you a free Ichimoku DVD for workshop for free. We sell that for $197 on our website. Everybody, thank you very much. We have a bunch of great presenters coming up. Thanks again, obviously, and of course, every single time I love talking at Trading Pub. They bring a great, great audience. Thanks, guys, and I'll see everybody in the workshop in about 2 weeks.